Hi, I'm Melissa Joy, and welcome. Today we are talking about what's on everyone's mind, coronavirus COVID-19, how it has affected your money. And I want to offer some real life solutions for the changing circumstances of everyone's financial life. I know that each of you is in a different place. And so this is generic or general information, but it should be a starting place for you to think about your own personal needs. And so while you're all here, let's go ahead and get started. And I want to share my screen so that we can get right in. Okay, there we go. Okay, so again, I'm Melissa Joy. I'm president of Pearl Planning. And our agenda tonight is to talk about what is going on. I hope everyone is safe and healthy. And if you're like us in Michigan, you're staying at home. And then also we're going to talk about taking the steps to take if you are working, steps to take if you had been working and are now not working, furloughed, unemployed, or laid off. Also, we have important actions for business owners and what to do if you're retired, and then additional new government initiatives. But I'm going to layer in everything that's been going on with the new CARES Act, which was passed into law last Friday. This presentation was created before that law, so I'm going to give you verbal information about what is changing, and then I'm also going to have a new video about the CARES Act coming out very shortly. So let's go ahead and dive in. First, going into advice for everyone. Everyone has circumstances changing. Both the money that you're spending as well as the money that you're bringing in is probably subject to uncertainty right now. And so here's some advice that I think is just tried and true that applies to almost everyone. First of all, your cash flow may be changing with the money coming in. And I can also assure you, because everyone's staying home, that you are changing your consumption habits as well. You may have a much bigger grocery bill, but a smaller entertainment or dining out bill. So go through your monthly budget and figure out where you're really at. I think a lot of people are very concerned, understandably, as their cash flow is changing, but knowing exactly what is happening based on these new consumer behaviors and habits is important as you analyze where your vulnerabilities are. I know it sounds morbid, but I suggest that you make sure that your legal documents are up to date. It's something, estate planning is something that, drafting your wills and trusts and powers of attorney, that's something that nobody loves to think about, what if something happened to me? But this is a prime time where the examples of people unexpectedly being ill, kind of being taken by surprise, are right in front of us. So make sure that your legal documents are updated. Make sure they say the things that you want them to say. And that applies to everyone regardless of your age. Even if you have adult children who are younger, you may need to go and get some documents in place in case they needed a power of attorney or something like that. And then whenever you're in a time of financial anxiety, I encourage people in transitions like this to think about your now, soon, and later needs. So there are some things that you have to figure out right away, but there may be things that are weighing on you that are more mid and long-term concerns. So triage those, put together a list of what you have to figure out right now and what can wait a little bit. That's always an effective way to organize in a time of concern, crisis, or transition. And then stay healthy, take care of yourself. So many of us have different interrupted sleep patterns. You don't have the exercise that you were used to if you got out and went to the gym. So take care of yourself, practice self-care and compassion, and make sure that you're getting the resources you need. And if you need to reach out for help with friends, family, community, mental health resources, please do that. Please be encouraged to do whatever it takes to take care of yourself. Okay, so if you are working, what steps can you take to make sure that you get what you need during this time of change? So we just experienced huge unemployment claims, bigger than we'd ever had, and more than 3 million unemployment claims. If you are fortunate to still be working, have a frank and honest discussion with your employer about what your expectations can be over the coming weeks and months. I had a wonderful conversation with a client recently and asked her, hey, you know, how are things going? And she said, I talked to my boss and he said, we can keep things going without having the events that we normally plan. They were an event-driven business for 6 months. Not everybody's going to be in the same situation, but having some clarity and transparency of communications can be critical. Assess and retain your emergency reserves. So one of the most boring but fundamental parts of a financial plan is having emergency reserves on hand. And of course, it's much easier to plan for that outside of a crisis. But if you are in this time and you think that things may be more uncertain for you going forward, count everything up, see what you have on hand, and make sure that it's appropriate, or it's what you need, and start triaging if not, to eliminate unnecessary expenditures. You will, for 90% of Americans, you're going to be receiving a rebate check from the new fiscal stimulus. That's if you were a single filer. If your income was $75,000, it starts to phase out and completely phases out for someone with no kids around $99,000. If you had kids, there would be an extra $500 on top of the $1,200 that you would be receiving as a single person. A married family or someone filing jointly would get up to $150,000, or for incomes up to $150,000, you would be getting $2,400 plus an extra $500 if you have kids under the age of 17. So it's not 17-year-olds, it's up to 16 per child. There's no limit on the number of children. So if you're, kind of trying to assess your emergency reserves, that's certainly something to keep in mind. Of note, that is for your 2019 taxes if you filed them, in terms of where you have that income test. If you didn't file them yet for 2019, which would typically be filed by April, we have an extension through July, then you would be looking at the taxes you filed in 2018. Now, if you think something's going to change with your employment, plan and scenario test what would happen if things changed. I'm going to go into this for those that aren't working or have been furloughed, but there is help in unemployment benefits, and they have been boosted up for those of us that will not be able to continue employment straight through, but also be dusting off your resume and thinking about career skills and really having an honest assessment of, are you prepared to look for a job if you need to? And then stay apprised of new programs. So things are shifting and changing. We just had our kind of third wave of changes with the CARES Act, which has a lot of programs that are helpful. I think they'll also help some employers to retain their workforce. And then of course, it's always important, don't go to work if you're sick. Look for adaptation and flexibility. If you're like my family, where we're homeschooling children at the same time that we're trying to work from home, just be adaptable and flexible as much as you can if you're able to be working right now. Small business owners, what has changed? Well, so much. So many of our revenues are being impacted by either a forced shutdown, a total change in what you're receiving, etc. Run scenarios for your business to see what are possibilities. And now we have new programs that are available through the CARES Act that may help you. So the Small Business Administration already had emergency reserves that were available. The terms of those notes are becoming more attractive. In fact, some portions are forgivable if over the next 8 weeks you have expenses such as payroll, you're paying for your mortgage or paying for your lease, utilities, health care. All of those are potentially something that you could have forgiven in the new CARES Act. So there's payroll protection. There's encouragement. If you are able to retain your workforce, but you have a reduction in your quarterly revenue more than 50% compared with last year, you could get some credits or assistance there. There's flexibility in terms of payroll tax payments. And so there are a lot of options, especially in the new bill. So run scenarios and be looking at what makes the most sense. Certainly have an early conversation with your bankers if you have established creditor relationships, so that you can identify which programs make the most sense, and do that analysis in context with your financial planner or someone like myself, your CPA, and your attorney. Just like I said, it's helpful if employees have communications with their managers and owners. Same goes back. Have a clear, concise communication with your team as well as your customers, so that they can really stay apprised of what's going on. If they can help, they'll know how to, and it's just always critical to have transparent communication. And then triage, you know, if you have a budget, which I hope you do, then go through and see what you have to do and what is a nice to do or nice to have. See if there's any flexibility within your budget. And then, you know, your personal balance sheet can certainly be impacted by the healthy solvency of your business. So make sure that you're communicating. If you have a partner who's not the owner themselves or the decision maker day to day, you're effectively communicating with your family members who they share your balance sheet as your company is being impacted by the changes in economic uncertainties. Have a clear understanding of what's at risk with your personal balance sheet, and a financial planner, CPA, and attorney can always be helpful in those conversations. If you're temporarily unemployed, sign up to collect unemployment benefits right away. You will sign up with a state. So if you're here in Michigan, you would sign up with the state of Michigan. There are going to be federal adjustments higher for what you receive with unemployment. So typically you wouldn't receive unemployment benefits for that first week you were unemployed, but with the new bill you would. And then for the initial part of unemployment through July 31st, you're going to potentially be receiving an extra $600 per week that is part of the federal stimulus bill. So that hopefully will make a big difference for many families who are recently suddenly unemployed. There's also extension for the number of weeks that unemployment insurance will be covered. And there is some additional flexibility. So if you are a gig worker or self-employed, a contractor, all of those may be able to be receiving unemployment. And then also, if your income, like we talked about, was under the 75,000 single, 150,000 married filing jointly thresholds, and then phasing out, then you would potentially be getting an additional check that can go into your emergency reserves. So then really triage and look at what's most urgent, where are your weaknesses, communicate with your creditors. So there's flexibility in terms of some of the programs that are available, in terms of there may be forgiveness for, or not forgiveness, but kind of a stay for some of the things that you may owe. And then, you know, financial institutions do not want a massive, massive portion of the people that work with them, their customers, to no longer be customers. So there's a lot of flexibility that's being offered institution by institution, with utilities, etc. So have conversations with the individual relationships that you have to see if there is some flexibility on those most urgent items that you have. And then be brushing up on your resume and career skills. Hopefully there's clarity so that you will be able to go back and be doing the things that you were doing before, but it's always good to have a plan B and C just in case that isn't going to be a possibility, either immediately or for a while. Retirees, things are changing for you too. For many of you, you have an important source of your income as your investments in your retirement accounts. And of course, investments are being impacted by changes that are going on right now. So assess your sources of income. It's important to see how much cash you have on hand. And in terms of sources of income, you know, Social Security shouldn't be changing. That should be a consistent, stable source of income. For many pensioners, people who are fortunate to receive a pension, that may not be changing as well. Also assess your spending habits. So those may be going down because you're used to travel, you're used to extra spending that you're just not doing because you're not able to leave the house. Stay connected while you're socially distanced. So make sure that you're getting those important interactions. One thing I haven't included on here, which was part of the CARES Act, is that your required minimum distribution for those of you who are either over age 70 and a half or age 72, it's kind of a tricky time where both may apply because of the Secure Act that occurred at the end of last year. Your required minimum distributions are going to be waived for 2020 if you haven't already done them. And if you did it in the last 60 days, you can actually put that money back in. So keep that in mind that, you know, there may be some tax flexibility. I think that part of the stimulus is really more helpful for people that are a little more financially secure. So we can, you know, debate the value of that from helping those that are the most weak in their need, but it is a relevant, planning consideration for many retirees. And then review your investment plan to see how you're coming through this, the risks that you are taking on. It's always good to make an assessment as you're going through a correction. Okay, so this is a list of sources to access emergency reserves, and some of those have been changed based on the CARES Act. So obviously it's a luxury that many people, when they go through the process of financial planning, work on to just have emergency reserves in the bank. This is a textbook time where we see the value of emergency reserves. But I remember an anecdote from my own personal history. We had a tornado that came through my neighborhood 8 or 9 years ago, and I was sitting in the basement with my mom, who happened to be in town visiting. She lives in Texas, where tornadoes happen often. In Michigan, that's not the case. And as we're sitting in the basement and the tornado's coming by, the sirens are screaming, Mom said, it would really help if you had an emergency kit down here in the basement. And I was like, well, thanks, Mom, but at this point in time, it's not the ideal time to think about what I should have done. So for some of you, you may or may not have that money in the bank that you're really seeking. So let's go through some other areas that can help you to make sure that you have the cash that you need on hand, or you're able to pay your bills. Some of them have varying degrees of good versus bad. Cash and investment accounts, that's you may have accounts that you consider more invested for the future, but they have some cash available, or more secure, more stable investments, bond-like investments perhaps. Those may be a good source of emergency reserves. They have the advantage that you don't have an extra tax bill, like if you borrowed from a retirement account. Now, I will say though, if you take money from a retirement account right now, you're not going to have to pay a penalty, even if you're under age 59 and a half. So that's new, that's part of the CARES Act. I'll have that in that new CARES Act video that will be coming soon. If you do take funds from a retirement account, like an IRA or 401k, you will pay taxes on them, but you do not pay a penalty. That's typically a 10% penalty. If it was from a 401k or a qualified plan, you don't have to do an automatic withholding, and you actually get a do-over. So you can take that money out, but you have 3 years to repay it, or you can pay the taxes that you would typically owe over a 3-year period. You could choose to pay it all at once too. So that's something I didn't include here. Your Roth IRA contributions, we love to have these invested for a long period of time, but you don't have to pay a penalty for the money that you put into a Roth IRA in many cases. 401k loans are always an option if you're still working with your employer. If you're already gone, you're moved on to the next employer, that's not an option. But interestingly, with the CARES Act, typically the 401k loan amount can be $50,000. Now it is up to $100,000, and you can borrow all the way up to that amount if you need it. Let's say your account is valued at $100,000, and typically you would not be able to borrow the full amount of your value, but you can in this circumstance. We don't love credit cards because they have high interest rates, but sometimes, it's got to be one of the things on the list. Interest rates are very low right now, so home equity lines, sometimes people open them, especially if they're a business owner, or need, kind of some extra emergency reserves. So that may be an option for you. And the interest rates may be lower than they would typically be. Also personal loans. So if you're doing some house projects, you may decide to do a loan where you pay things back over time. And then intra-family loans may be a possibility as well. So everyone's circumstances are unique and different. I love to brainstorm with people. If you're really thinking, oh my gosh, what if I need more, or you have a big expense or payment coming up, this is a prime time to think through, where would you find money if you have to, or you may really have that bill coming. So let's talk if you need to figure it out. And how do you trim your budget? Well, I already mentioned that there's probably some natural attrition going on of your typical spending, just because we aren't driving, we're not flying, we're staying close to home, and our typical entertainment expenses or even wardrobe budgets, so many things are changing. You may be receiving refunds from canceled commitments. And I always encourage people to be looking at your recurring expenses, see what you don't use and get rid of them. You can be making temporary reductions to things that you plan on kind of adding back after. And what you don't want to do though is, you don't want to over trim. You've got to be honest and reasonable about what you can make work and what you don't. So I mentioned that changes are coming. I've mentioned a lot of the changes that are here with the CARES Act. Here are some of the additional reminders that you need to be aware of. You have an extension for when you file your tax return until the summer. And for the most part, that goes for payment and filing. It's not for everything. But keep in mind that in many cases, you have the opportunity for an extension. Now, weigh the options. Some people may be receiving a refund, so why would you extend? Also, if your income was high in one year and lower in another, and you're trying to qualify for the rebate, make your decision as to whether you should file now based on that. There's an additional law for paid leave that is hopefully making some of the kind of frontline critical workers that we're so thankful we have today, hopefully able to be off the job but paid when they're sick. For those of you who have student loans, there is a moratorium on the requirement for payments and interest on payments that goes through September. Some of you may still want to be making your payments. It may give you the opportunity to eat into principal a little bit. I think it's noteworthy if you were planning to qualify for loan forgiveness because you work for a nonprofit or government entity, that these months will still count even if you aren't making your payment. That's certainly interesting. And keep in mind, these are for federal loans, so it doesn't count for private loans, but there's a wide coverage for these student loan help or concessions. For many people who are renters and homeowners, there may be some help with your payments for mortgage or rent, especially if you are attached to public entity loans or your landlords are. There's also adjustment possibilities for utilities. So there's a lot of changes that are coming, and everything is personal, but look through the options. There's really a coordinated effort that's bipartisan to try to get this economy working over time, and every one of us is an important part of that equation. So as things are changing, adapting and adjusting, if you can adapt and adjust your response, I think that there are more options certainly than there would have been if we talked about this a couple weeks ago. I'm so glad I can be constructively talking to people about what may be a good fit for them. Now, I've talked about ways to trim. I've talked about ways to not do things. Everybody's in a different circumstance. And for those of us that are fortunate where we know that we have our emergency reserves, we know that we don't have a change or our jobs are more secure than others. First, personally, I'm trying to continue to support local businesses. I'm not trying to slash and thrash just because of our personal circumstances. So that's a personal choice. I'm trying to triage for you if you are really having to tighten. But if you don't have that, certainly it would help the community and economy if you're able to continue to do some of the things that you were used to doing. For those of you who want to help, and I've had some wonderful conversations with clients who are just looking to help those who are in need, here's a list of some of the resources that are local here to us. The United Way of Washtenaw County has a COVID relief fund, and there's matching going on. There was $1 million donation from a local philanthropist, and so your donations get a match to the United Way. The Ann Arbor Area Community Foundation has help for nonprofits, and I should mention that some of the small business help is also available to nonprofits. So that's important conversations I've been having with some of our community here. Faith in Action is a food pantry here in Dexter and Chelsea, and Food Gatherers is for all of Washtenaw County. There is a strong need for blood and plasma donations, and so that is something that I know friends in my community who are medical workers are asking for. And help each other out, help your neighbors, offer to do things that they need. Reach out and just be a social connection to those who are vulnerable or lonely, and ask for your help yourself. This is a time where people really want to be helpers, so make sure that if you need help, that know that there are people who care and want to be there for you. I think that pretty much wraps up our presentation. I just want to thank you so much for spending the time to understand and know more about how you can help yourself. I encourage you, there is a Q&A section, so if you want to write any questions, I'm going to check that right now. But don't hesitate to reach out to me personally, and it's wonderful to be able to be a resource to the community in a time like this. I hope that everything goes back to normal so it's not such an urgent need, but in the meantime, I would love to hear from you if you think that I might have some information that would be helpful to you. So with that, let me stop the share and see if we have any questions. I'm going to leave it open for just a second as I share my appreciation for all of you who have joined us. One of the things that I wanted to mention before we conclude is that we do have a newsletter that is getting a lot of these events that we're doing. We're trying to be as much information. It seems like we have years worth of information each week. I'm working on a presentation that will introduce people to being investors during bear markets, which so many of us are investors. You know, it's an important part of our retirement to be investors. So it's not a luxury item. Investments are something that is available to all of us. And just stay in touch. If you have any questions, we'll keep you apprised of things that are coming up. And with that, I just wanted to thank you for your time and tell you, oh, I do have one question. Okay, do we still have time to get our 2019 taxes in? I'm waiting on my K-1 and some other things in order to have that used for the government checks, or is it too late? Okay, I apologize because I am not 100% sure because it hasn't been that clear about when they're going to be doing those calculations. What I can tell you though, let's say that you were supposed to receive it, but because your 2018 tax record is still on file, it looks like you made, let's say you made $150,000 2 years ago and you were under $75,000 last year. Well, in that case, you are still owed that money. You just don't have a way to prove it right off the bat. So you will get that money later down the road when tax returns get filed for 2020. I know that's frustrating because you probably want the money right off the bat. And hopefully we'll get some clarity so that we know a way for you to get the money that you deserve. It's interesting though, because it sounds like there's no clawback as of now either. So if you got the money but you really weren't owed it based on your 2020 numbers, that money so far sounds like it may be yours to keep. Oh, I've got another question. Okay, how long will unemployment benefits last? It's state to state. So you start with what our unemployment benefits are at the state, and then they've added additional weeks. So I believe it's an additional weeks past whatever the state's amounts are. Some states have limited their unemployment benefits, and sometimes it's tied to where the unemployment rate is as well. And during those first weeks, pretty much the second quarter of the year, going through 7/31, you're going to be looking at that added bump of getting unemployment paid, both from state and then an additional on top that's federal from the federal government. And keep in mind that is intended to be a way to have people spending and not hunkering down once we're able to kind of leave the house. And hopefully that will help our economy boost back up and get back to normal. I think that might be all our questions. I'm really glad such an engaged audience, and we will have a video version of this coming up soon so that you can on demand share it with friends. But if anybody has any follow-up questions, don't hesitate to reach out. And thanks again for your time. I appreciate it. Take care of yourselves, stay safe, healthy, and as much as possible, alleviate your anxiety with your finances through these triage techniques. Thanks so much.